I'm Rodney Peterson. I started working with Comstock Investments in 2000 as a broker, and since then have transitioned into working on the insurance side of our services. Take just a few seconds here and a few clicks of the mouse, and we'll transition to our slide presentation. Okay, AgriVantage is the name of our crop insurance company. We have 5 licensed agents and clients in 6 states. We believe the reason for our continued growth is because we don't just sell crop insurance. Crop insurance is just the beginning of a sound marketing plan, and from there, we strive to look for profitable marketing opportunities and help our clients take advantage of these opportunities when they arise. From a risk management standpoint, federal crop insurance has become increasingly important. With loan rates for corn and soybeans at $1.95 and $5 respectively, and very little revenue protection from the farm program, revenue protection multi-peril crop insurance is the only viable method to protect our production costs. We work with each client on an individual basis to help educate them on various policies and options, and to help them make informed and intelligent decisions on which insurance products best meets their needs and goals. With yield and price being our 2 main risks in production agriculture, the Revenue Protection Crop Insurance Plan offers protection of both. We view the market from both a technical and fundamental basis. Is the trend up or down? Are we adding to or subtracting from the pile? And Alan Hoffling, Comstock's head broker, and his staff are constantly looking for technical buy signals in the market. As always, weather plays an important part in production of raw agricultural commodities, and we strive to stay abreast of changing weather conditions across the entire globe and their potential effects on crops throughout the world. The correlation of the percent of ice coverage on the Great Lakes and corn yields in the United States is a noteworthy statistic. And also, what does the Southern Oscillation Index tell us on the probabilities of an El Nino or La Nina year? And as you can see, Great Lakes total ice coverage at 13.5%, lowest ice coverage in the Great Lakes in the past 44 years. This could play out to be significant. Are we higher or lower versus past years, and why? Looking at ending stocks, looking at world demand, all takes a part of looking at our price history and why it occurred. History going back to 1991 shows that the corn harvest price has never been lower for more than 4 years in a row versus the spring price. 2016 was the 4th year. So maybe the correlation of ice coverage versus corn yields will be relevant for this crop year. We also make it a point to explain what is not covered by a multi-peril policy. Fire is not a covered peril with a multi-peril policy, with the exception of lightning and volcanoes. A fire caused by someone's cigarette, harvesting equipment, or by a neighbor is not a covered peril. If you are nearing harvest, or even half done with harvest, and you discern your crop is at extreme risk for a fire, we do offer a standalone fire protection policy at a very affordable cost. Federal crop insurance policies cover hail, but do not cover the full value of a good crop. We offer many hail policies, and Production Plan Hail covers the top end of your crop and pays out 3 times faster than a full coverage or deductible policy. If it hails, Production Plan Hail is by far the best policy that we can offer. A Production Plan Hail policy uses a factor of 1.2 times your APH. A producer with 61 bushel APH would have a 73.2 bushel hail protection plan with Production Plan Hail policy. 73.2 bushel times 1019, the spring price, would equate to $746, which would give us $217 of hail protection if you also purchased an 85% multi-peril policy. And then in this case, a 29.2% hail and yield loss would provide full payout of the production plan policy. And any loss beyond that would then be triggered by the multi-peril policy. The benefit of a production plan hail policy is there is no gap in coverage. What if it doesn't hail, but your soybean yields are lower due to a drought or big U.S. crop caused lower prices at harvest? RAMP is a relatively new buy-up program offered exclusively by Farmers Mutual Hail. And RAMP provides the option to buy up just yield or both revenue and yield. In many cases, RAMP coverage can provide a guaranteed profit when placed above a multi-peril policy. So why are we looking at RAMP? The risk of declining exports caused by political policies, coupled with a potential record South American crop, U.S. ending stocks more than double versus a year ago, and the potential for increased soybean acres this year in the United States, all point toward the possibility of lower soybean prices at harvest. A RAMP payout can be triggered by lower prices or poor yields or the combination of both. The simple explanation is RAMP allows you to purchase up to 95% of your APH, and it works just like a revenue protection multi-peril policy. The next few slides offer examples of how RAMP could provide a potential payout. The quotes in these examples are merely estimates, and actual quotes are determined by state, county, crop, and APH. First example, we see that the producer that has a 61 bushel APH, he grows 61 bushels that year. Harvest price falls to $8.65. Under this scenario, he could collect the full $62 payout with the RAMP policy. Next example shows producer of the same 61 bushel APH, and he actually grows 64 bushel. If the market would drop to $8.20, that $62 maximum payout is still available. And what we're looking at, for some producers, RAMP could be a replacement for production plan hail. Granted, RAMP is not for everyone, but certainly a viable option to consider for some producers. With today's advancing technology, we're pleased to be able to offer precision crop insurance solutions. We are now able to utilize the information from your planner and combine to complete the required crop insurance reports, saving time and money. We can provide you the guidelines and requirements to help you qualify to use this technology. No matter where you buy multi-peril, the premium is the same, service is the difference. And we view ourselves as being distinctively different. If you would like to see the difference, give AgriVantage a call, and thank you for logging on.